And that's hundreds of dollars per month forever. You can't ever fix that. You can fix mortgage rates. You cannot fix the fact that you spend an extra $30,000 on the house. It just is gone. Welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Broch Lassig, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth. All right, guys.
Hold on.
Are you ready?
Yeah, I'm ready.
Okay. All right, welcome back to another episode. And this is the episode where we lose all of our followers because we're talking politics. So this will be fun. No, I'm just kidding.
Not true.
So what we're talking about today, one of the most common questions I get, or answers I get right now, is I want to wait to buy and or refinance until after the election, because everyone knows that after the election, rates come down because it's election year.
And we even have realtors preaching the same thing.
We've said it in the past.
Yeah, it's true. Until we questioned ourselves.
Exactly. Because we're nerds. We like to look at the data. And then we looked at the charts. Actually, Broch pulled it up and was like, wait, no, this isn't true.
Yeah, there's nothing factual about it.
So dive into the facts.
We dove into the last 4 presidential cycles. Of course, we could go back further, but we just chose those ones. And what we did was we studied what did mortgage rates do from election and 12 months after election. What happened to mortgage rates? Because the common consensus among so many people is that, hey, mortgage rates will fall after the election. This time, maybe that's true, but because of the election, there's no real data to back that up. So here it is. In the 2008 election, mortgage rates did fall for the year following that election by 1.21%. However, that was 2008. So the Great Recession, the worst recession that we've ever seen in U.S. history, and very, very hard on housing. So the government was trying to subsidize housing.
Everything they could to try and help.
Exactly, try and help housing. Yeah, rates went down 1.21% during that time. Now, fast forward to the next one, 2012, rates from election 2012 and a year following actually went up 0.91%. So almost a full point increase the year after the election. Now, 2016 election, rates went up 0.15%, and 2020 election, rates went up 0.3%. So 3 out of 4 times, rates actually went up.
Well, and there were party switches. So it wasn't like just when Democrats or just when Republicans get into office that rates
totally
went
mixed.
Down. It doesn't matter.
There's no rhyme or reason, Republican, Democrat, presidential election or not, no rhyme or reason that rates will move in any certain way at all. So the first, and I think the most important thing is that we've been, once we uncovered this information for ourselves, we've been coaching ourselves on, but also telling our clients, all our business partners, like, don't fall for the BS trap of people. This is really just people talking out of their butt about some idea and really probably a hope that rates fall. We hope rates fall too, and we think they will. But the interesting thing is, the other interesting thing is, rates fell in the 2008 election, and none of the other ones, and we should go back and look at some others now. I'm kind of curious, but they fell, and that was during a recession. So what we've said many, 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 many times on this show and on all of our social media to all of our clients and partners, during and through recessions, rates do consistently fall. That is one consistent truth, and they fall in a very significant way. So that's something we can count on, but elections, total BS. Now, the other thing that I pulled, and TJ can just backfill on information here. I'll just bust through the data points. The other thing I pulled was during that same time period. So I went from 2007 to 2024. And what I looked at was home prices and construction costs for home building construction costs. So I looked at those 2 data points because there's so many of our clients that are choosing to not buy a home today or not build a home yet until after the election because supposedly rates will fall. Well, that's silly because you can get the lower rate later if in fact they do fall. But the data says there's no certainty they will fall because of the election. However, what was absolutely certain was that home prices, this is in Utah, from 2007 to 24 year to date, they went up on average 4.86% per year.
Wow.
And that was during the worst.
Right. You included data from 2007 on.
Right. That's the worst real estate depression in home prices that we have seen in the U.S. by far. And even including that time period with the worst reduction in home prices. Now, granted, an uptick during COVID as well, and things tend to just balance themselves out over time is the reality. But they went up 4.86% year over year on average. Now, the crazy thing is that's the 67-year average as well. That 4.86%. Yeah, 4.86%. So, like, that's a pretty solid average. If you just say home prices are going to go up about 5% per year, you can almost take that to the bank. It's just a matter of how much time, because obviously, there was a time period close to 2007 where if you sold, maybe home prices would have been down, but if you stuck it out for a couple more years, you would have hit that average. Now, the other piece is construction materials. So this is the cost to build a home, not the labor, but the actual cost to build the home. This went up from 2007 to 2024 by 3.5% per year. So obviously labor costs are also going up, which is why you're seeing new home prices go up at a higher pace than 3.5%. But there's
cost of materials.
Yeah, this is just cost of materials. That's what that was 3.5% per year.
Gotcha.
So we're talking with consistency. Prices of housing go up year over year with consistency through all sorts of economic conditions, through Democrat and Republicans, through different economic scenarios. They go up. That means the housing becomes more expensive. Rates, there's no consistency in rates except for they go down in a recession. Now, you don't necessarily want to wait for a recession to buy a home. You want to buy now, because what if the recession is 1 or 2 years away? Well, that house just got more expensive by 5 or 10%.
We've already seen that. I mean, we've been talking with clients beginning of this year. Well, this year's not known for home appreciation, but January to now, home prices, I mean, it depends on the area where you're at too, but you can see an appreciation from anywhere 1 to 3 or 4%.
Yeah, I've even seen reports for the median home price here in Utah up 6%.
Right.
Well, that's year over year, not year to date. So in the past 12 months. But definitely, people have been like singing at the mountaintops that there is risk of home prices falling and this is a bad time to buy. And now you hear election coming up, so on and so forth. Like, it's just not true. People are losing money all the way. And the crazy thing is lots of people just aren't realizing it because it's been a slower bleed than the COVID era. Insane.
The 20% appreciation.
Yeah. So it's not felt like home prices are going up, but they are by tens of thousands. And that's hundreds of dollars per month forever. You can't ever fix that. You can fix mortgage rates. You cannot fix the fact that you spend an extra $30,000 on the house. It just is gone. Money's vanished.
Yeah.
So what we say, and this can be a short episode. We wanted to make that very clear. But what we say is, like, don't hesitate based on some fallacy or belief that something is going to happen that's not data-driven, fact-based stuff. That's what we are good at. You can rely on us for that information. And we just say, like, get in as soon as possible. The best time to buy was yesterday. If you didn't buy today, if you don't buy today, buy tomorrow. Like, it is time in the market that will create wealth in housing for you and your family, and also will create a more consistent cost of housing, because these mortgages go on a 30-year fixed mortgage. So if you wait 5 years, sure, maybe rates are lower, but the price of the home is more expensive by a significant amount forever. So you may as well just lock it in now and then refinance later. So anyway, those are my closing thoughts.
I agree. You said it best. Time in the market versus timing the market. So if you guys have any questions, let us know and we'll catch you on the next one. Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.